Welcome to Drill Down Earnings. We get the latest earnings from Arista Networks. I'm trying not to say Arista, which of course is a record label. No, Arista Networks. This is the business story behind one stock on the move. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research, where we looked at the 50 most important companies in technology. Arista, such an interesting company because, it came from a bunch of former Cisco people, some of Silicon Valley's best and brightest, and their goal was to take down Cisco or at least do the things that they thought that they could be doing in the world of networking and Ethernet, and they're doing it. But let's talk about this. The stock is down, even though Wall Street numbers were exceeded with these results. The results were decent. These are Q4 numbers from Arista. And while the quarter was good, the guidance for the next year may be a little disappointing. Let's talk about specifically what we saw from this company as they reported these numbers. So specifically, we saw $7 billion in revenues. That's 20% higher than it was a year ago, and gross margins of 64%, also just terrific for this business, growing really steadily. But we look beyond this. One worry about this is kind of what's going to happen in this new era of data center build-outs. You would think that the tens of billions, the hundreds of billions of commitments towards building data centers would be really good news for Arista and kind of every other company in networking, semiconductors, any kind of things that might go into liquid cooling, power generation, whatever it's going to take to build data centers. But data centers, I don't know. But what we saw here was a little bit of hesitancy about the numbers that may have been way up and to the right. And the concern is that Arista might be disintermediated a little bit by some of their partners, by some of their customers who are saying, we're going to design our own stuff. So let's look at the numbers, but with that as a concern about what's going to happen going forward for this company. So they're in a bunch of different speed levels, if you will, in terms of what is being spent and how fast these things are going to be used. So there is 200 gigahertz, 400 gigahertz, and even 800 gigahertz in the marketplace right now. And most of the business is in the kind of 200, 400 gigahertz arena right now. 800 is kind of on the come at 1.6 terabytes in the future. Yes, these numbers double every time. That's the way this stuff works in Ethernet. And Ethernet does seem to always win. One of the things that Arista likes to measure using industry analysts, not me, but others, Korean in particular, a company that has really focused, an analyst has focused for a long time on measuring how many ports, literally how many ports of Ethernet connectivity are happening in the industry and who's getting it. Is it going to Cisco? Is it going to Arista? Is it going to somebody else? Is it going to Rob? So what we see is that Arista is gaining more and more share in terms of the measurement of ports, whether it's 100 gigahertz, 200 gigahertz, or 400 gigahertz. Indeed, last quarter, they showed us that they had finally crossed over from their arch rival, if you will, that Arista had finally taken over more ports than Cisco, and that is continuing now. They say, according to this analysis, again, from Korea, that Cisco's down to 21% of all ports and Arista is now up to 31%. And this is happening as they're going through their inventory really quickly. There's no inventory buildup there, and inventory, of course, is a sticking point for Cisco, which has been improving slowly, but not quite there yet. You can look at our last drill down earnings to check that out. But when these numbers came out, we saw maybe a little hesitancy in the guide for the next year. Stock was down 7%, but that's on the heels of a 57% rise in the last year. So pretty good move for Arista, even if it's not a great day for Arista. Now, as I mentioned, as we look out towards the future, 100, a little bit of 200, a lot of 400 and 800 is the market today in 2025. Going forward, it's going to be a lot of 800 and even to some 1.6 terabyte speeds for these Ethernet stuff. Why is that? Well, let's talk about this. And I'm going to get a little geeky here, but I know you can handle it. So Arista is, at the heart of a lot of AI networking, even though they're not in optical. So why is it? So their EOS, or extensible operating system, it's got availability, it's got advanced telemetry, and it's really scalable. So they can build out and use it as much as they want to or not use it as much as they want to. It's a lot cheaper than optical, less than half the price. And it's the foundation of their very popular 7800 AI spine switch, which is used for a lot of big, large-scale AI networks right now. But the concern is that over the next few years, their partnership with Meta in particular, one of their biggest customers, if not their single biggest customer, over 10% customer, Meta says they're going to spend $65 billion this year on data centers. So you'd think that'd be good for their partner Arista. but they're not buying all this stuff off the shelf. They're designing their own products, including their own semiconductors, including they're designing their own white label boxes, white label, whatever, and they're designing an Ethernet switch with Arista, not to replace Arista, but with Arista. So the question is, with this distributed Ethernet switch, which again, co-developed by Meta, and it's not the EOS that we talked about, that extensible operating system, it's also a fixed operating system. So it's got those options built into it, which gives, EOS gives, more, or sorry, fixed operating system, FOS, gives them more flexibility depending on how they want to use any given switch at any given time. It's more streamlined because it's a single piece of equipment, and it's a fixed software alternative that lets them, use this for these giant multi-billion-dollar data centers like the one they're building in Altoona, Iowa. Just jaw-dropping stuff. So the question hanging over this analyst call today to all the analysts like me on the call is, how much is Arista going to get out of these Arista Meta switches? And is it going to be enough to see the kind of growth that we've seen in the last few years? CEO Jayshree Ullal of Arista tried to convince us that because these semiconductors are so expensive, these GPUs, and because these data centers are so precious, that Arista is going to have to be there.
First of all, when you're buying these expensive GPUs that cost $25,000, they're like diamonds, right? You're not going to string a diamond on a piece of thread. So first thing I want to say is you need a mission critical network, whether you want to call it white box, blue box, EOS, or some other software. You've got to have mission critical functions, analytics, visibility, high availability, etc. As I mentioned, and I want to reiterate, they're also typically a leaf spine network. And I have yet to see an AI spine deployment that is not EOS based. I'm not saying it can't happen or won't happen, but in all 5 major installations, the benefit of our EOS features for high availability, for routing, for VXLAN, for telemetry, our customers really see that. And the 7800 is the flagship AI spine product that we have been deploying last year, this year, and in the future. Coming soon, of course, is also the product we jointly engineered with Meta, which is the distributed Etherlink switch. And that is also an example of a product that provides that kind of leaf spine combination, both with FBOSS and EOS options in it. So in my view, it's difficult to imagine a highly resilient system without Arista EOS in AI or non-AI use cases. On the leaf, you can cut corners. You can go with smaller buffers. You may have a smaller installation. So I can imagine that some people will want to experiment and do experiment in smaller configurations with non-EOS. But again, to do that, you have to have a fairly large staff to build the operations for it. So that's also a critical element. So unless you're a large Cloud Titan customer, you're less likely to take that chance because you don't have the staff. So all in all, EOS is alive and well in AI and cloud use cases, except in certain specific use cases where the customer may have their own operation staff to do so.
So that's the case they're making. They're going to have to be there if these data centers are going to work, and Ethernet always wins, of course, is the backstory, the tailwind behind Arista always. But what's it all mean? What's your big takeaway? Well, I've got that. So Q4 earnings from Arista Networks, a fantastic quarter for this company, but the stock sold off. Why? Well, nice record $7 billion in revenue for the year, $1.9 billion in a quarter, and they've done quite well selling their EOS system, selling their extensible operating system. There are concerns, however, going forward about their co-designed switch or server componentry, whether it's software or hardware that they're making with Meta, their biggest customer, and are they going to get enough of that business? That's why the stock has been selling off in after hours. But I think the drill down bite, the one number that tells you a whole lot, is the number that came out of the analysis that they had done and worked with some analysts to come up with, which is that they have more dollars in networking for the first time ever than their chief competitor, Cisco. 33.2% of the dollars spent in Ethernet switches and routing. These guys have it. Cisco, they say, now down to 28.9%. The numbers are from Arista and from an analyst that they work with, but nonetheless, it shows an important moment in the development of this very important Silicon Valley powerhouse. All right, thanks for checking out Drill Down Earnings. I'm Cory Johnson.